hit an all-time high on the Nifty 50. It's a historic day, 2nd of January 2026. We're at 26,329 and change. So it's a new high for us. It's a strong start to 2026. Can we last, Kunal, in terms of the levels now that open up for us? This has been critical. It's been a difficult ride again to get to this all-time high. And the last couple of all-time highs we've faced some difficulty. Do you believe that from here on, it's going to be smoother and sharper?
Yeah, it's going to be more smoother, more sharper. It's going to be more sustainable. And I think it's going to be more togetherness across various sectors and stocks. Because in 2025, it was hardly very few sectors which managed to move up higher. Mid caps and small caps, mids as we call them, they were underperforming. And very, very few select large cap names had actually shown signs of strength and recovery. And now I think we are getting into that point where there could be recovery across the board for individual sectors and underperforming stocks. We've seen IT stocks, metals, the PSU index, oil and gas space. There are so many stocks in so many spaces which are now looking very attractive. And this indicates that the market breadth has started to open up, as well as sector trends have started to emerge. Now, these are two very classical signs which we look out for, because market breadth opening as well as the sector trend indicates that there is a new trend in the making for the benchmark indices.
Okay, so yes, that's the outlook on Nifty. Fireworks on the screen. 26,330 is where we are at now. We're being joined by Mr. A. Balasubramanian of ABSL AMC on the show. Mr. Balasubramanian, thanks for your time, and quick thoughts on what are you making of this move that we're seeing in Nifty, a fresh all-time high. Where are we headed from here now that we're looking at the Q3 earnings that are just around the corner?
Yeah, sure. Of course, at the beginning of the New Year's trend, of course, quite positive. I think the way I see the market is evolving is the expectation of the earnings to get better. Post last year's GST cut and subsequent rate cut from RBI have been improving the overall expectations, rather increasing the overall expectations that earnings for the companies will get better, which now currently started reflecting. I think if you also look at the broad market, where we see the momentum is coming in largely on the basis of the, I would say, value-based buying, which is, of course, either driven by the earnings yield or the price have come down, but the asset remains very, 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 very solid. There's therefore the few days momentum, largely driven by the asset-based, asset-backed companies are also being rewarded. That's where I think I see it coming in. I think it's more or less in line with the expectation that the current year the earnings improvement, I think, will take the market to a different level. I think that's what we are seeing actually in the market in terms of touching a new high.
Right.